Hi, my name's Tom Elliott and welcome to another financial markets update for Hodges Real Estate. Well, on the financial front, there's both good and bad news this month. Let's start with the good first. The share market's been a lot stronger during October, driven in part by a lot of takeover activity. Now, in the oil and gas sector, for example, Santos has received a hostile takeover bid. Woodside is trying to buy Oil Search. In the financial services sector, IOOF has made a bid for Hub24, an online platform. And the Ale Property Group, which owns a whole lot of pubs, has received a hostile takeover bid from a private equity group. Okay, that's the good news. The share market is reasonably strong. The bad news, however, is that Australia's big four banks, led by Westpac, decided earlier this month to increase interest rates, completely separate from anything the Reserve Bank has done. In fact, I still think the Reserve Bank wants to cut rates further in Australia to try and force down the Australian dollar. Having said that though, the big four banks have been forced recently by their regulator to increase their capital. That means they've issued a lot of new shares in the share market. They need to keep the dividends flowing to those shares. As a result, owner-occupier home buyers have been slugged with a rate rise of between 17 and 20 basis points. Now, rates here in Australia are still at historical low levels, but I do think they're finally beginning to turn. I think the fact that the big four banks are putting up rates and they're all putting them up together means that the ultra low interest rates we have seen over the past year or so probably will soon become a thing of the past. They'll never be 17 to 18% again like they were 25 years ago, but I reckon now, particularly in the fixed rate market, is probably as good as it gets. Also, tax reform is very high on the agenda. I think the GST is going to be reformed within the next 12 months. Superannuation is certainly going to change, as much as people hate it when that happens. And also bracket creep, something that is forcing many Australians into higher and higher tax brackets, is something that the new federal government is going to do. So what has this meant for the property market? Well, rising interest rates have probably knocked the edge off our market. Clearance rates have fallen from a high of around 78–79% a few months ago, now down to around 71–72%. That's for houses, and in fact for apartments it is even lower at the moment. So the boil has probably come off the housing market a little bit. There are a lot of properties for sale during spring, as there are every year. And of course, if you are thinking of buying or selling a property, be it your home or for investment purposes, don't hesitate to contact your local Hodges office. Their assistance can only add value to the process. For more, go to hodges.com.au. Thank you very much for your company. I look forward to talking with you again, same time next month.